Have you ever wondered why some people seem to grow their wealth effortlessly through the stock market while others stay stuck just saving money in a bank account? In 2026, the stock market continues to be one of the most powerful ways to build long-term wealth. Yet so many people hesitate to get started because it feels complicated or risky. Today, we're going to break it all down in simple, easy-to-understand terms so that by the end of this video, you'll know exactly how to start investing, even if you've never bought a single stock before. I'm going to walk you through the basics of how the stock market works, why investing is important, the different types of investments you can consider, and some practical tips to help you start confidently this year. Investing doesn't have to be intimidating, and you don't need a huge amount of money to begin. Think of this as your first step into a world where your money can grow for you over time. We'll start by understanding what the stock market really is, how it functions, and why millions of people around the world rely on it to build wealth, so you can see why getting started sooner rather than later makes a big difference. By the end of this video, you'll have a clear roadmap for how to enter the stock market in 2026, what tools you need, and how to avoid common beginner mistakes, giving you the confidence to take that first step toward financial growth.
The first step to starting your investing journey is understanding what the stock market actually is and how it works. At its core, the stock market is simply a place where people buy and sell small pieces of companies, known as stocks. When you buy a stock, you're essentially becoming a part owner of that company, which means you share in both its profits and its risks. The stock market operates through exchanges like the New York Stock Exchange or NASDAQ, where millions of transactions happen every day. You may have heard of stock market indices like the S&P 500, Dow Jones, or NASDAQ Composite. These are groups of companies that give a snapshot of how the overall market is performing. Understanding some basic terms will make everything easier. Dividends are portions of a company's profits paid to shareholders. Market capitalization refers to the total value of a company's outstanding shares. And the P/E ratio tells you how much investors are willing to pay for a dollar of a company's earnings. Once you understand these fundamentals, it's important to grasp why investing in stocks is so powerful. Stocks historically outperform other forms of savings over the long term because of the power of compounding, where your earnings generate their own earnings over time. Unlike keeping your money in a traditional savings account, investing allows your money to grow and potentially beat inflation, which slowly reduces the buying power of money sitting idle. However, investing is not without risk. Stock prices fluctuate daily due to market trends, economic news, and company performance. So it's important to approach investing with a long-term mindset rather than expecting quick profits. Getting started in 2026 is easier than ever thanks to technology and online brokerage platforms. The first step is choosing the right brokerage account. There are many online brokers that offer low or zero fees, intuitive apps, and educational resources, making them beginner-friendly. You'll also need to decide what type of account to open, such as a regular taxable account or a retirement-focused account like an IRA or Roth IRA, which offer certain tax benefits. Funding your account can be done with as little as $100 in many cases, and it's smart to start small and gradually increase your investments as you become more comfortable. As we wrap up, let us take a moment to recap everything we've covered and look at how you can take action starting today. You now understand the basics of the stock market, what stocks are, and why investing is such a powerful tool for building wealth over time. You've learned that investing isn't about getting rich overnight, but about consistency, patience, and making informed decisions that allow your money to grow steadily. By opening a brokerage account, starting with small, manageable amounts, and choosing investments that match your goals and risk tolerance, you can begin your journey confidently in 2026. Remember to diversify your portfolio, avoid emotional decisions based on short-term market swings, and focus on long-term growth. Learning and improving as you go is part of the process. No one starts as an expert, and the best investors are those who stay curious and committed. Whether you choose individual stocks, ETFs, index funds, or a mix, the key is to start, stay consistent, and keep building knowledge along the way. The earlier you begin, the more time your money has to compound and grow, giving you a significant advantage in the years ahead. So take that first step today, even if it's small, and make investing a habit, because the decisions you make now can set the foundation for financial freedom and opportunities in the future.